Palantir is up 371% in the last year. BigBear is down 31% in the last month, and Veritone quietly up 129% in just the last 3 months. So here's the question. Which AI stock is about to break out, and which one could blow up your portfolio? On the surface, Palantir looks unstoppable. They just posted a $1 billion quarter, and their Rule of 40 score is an insane 94%. But at a PE of 738, it's priced like nothing can ever go wrong. And then BigBear, sure, they've got contracts with the DoD and the Air Force, but net losses exploded year over year. It's not sustainable. And then there's Veritone, the stock that nobody's talking about. Yes, the top line looks flat, but its AI software revenue grew 45%. Public sector growth was 90%, and gross margins are above 60%. And here's the kicker. Their new Data Refinery processed 5 trillion tokens last quarter. Basically the same scale as the training gets for the OpenAIs and Geminis, and Wall Street hasn't even priced it in yet. My name is Rick Orford. I've been trading since 1999, and I am not a financial advisor. And that's a good thing, because I'm not here to sell you hype. I'm here to break down the numbers so retail investors like us can make smarter, more confident decisions. And stick around, because in this video, I'm going to show you why Palantir might be the safe bet, why BigBear could sink, and why Veritone could be the sleeper stock of the year. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. And you all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with The Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by almost 6 times. Go to fool.com/ricko to get your 10 stock picks right now. Palantir is an AI company that provides big data analytics, enabling organizations to integrate, analyze, and act on large and complex data sets. Currently, they're one of the biggest defense contractors in the United States, and most of their revenue comes from government contracts, though Palantir also has a fast-growing commercial segment. And here's why this matters. Before we look at the stock prices, you need to understand what each of these companies really do, because the business model sets the stage for whether the stock can actually hold up. Then we have BigBear AI. This is a decision intelligence company that provides advanced solutions across defense, intelligence, manufacturing, and infrastructure security. Its TrueFace system delivers lightning-fast, real-time facial recognition, while its Veriscan platform enables airports to authenticate travelers securely and efficiently at scale. BigBear also holds contracts with the United States Department of Defense, National Security Agency, and the U.S. Air Force, embedding its technology into critical national systems. So even though BigBear is small, it's tied into some of the biggest institutions in the country. Veritone started in media with clients like ESPN, NBC, and Sony, but it's now gaining traction in defense and law enforcement. And with its new Data Refinery product, it's even selling AI training data to hyperscalers, and that could be a game changer. The company's proprietary platform, AIware, leverages machine learning models across hundreds of cognitive categories that convert unstructured data into actionable insights. AIware is highly modular and scalable and can be deployed in the cloud, on the edge, or in hybrid environments. The company also offers digital content management, licensing, and representation services powered by its AI technologies. Now, let's move to what really gets investors leaning forward, right? The stock performance. Over the last 52 weeks, Palantir registered a 52-week high on August 12th. Over the last month, though, Palantir is down 10%. However, if we zoom out a little, year to date, it is up 117%, and over the last year, it's up over 371%. And if you bought Palantir 5 years ago and forgotten about it, you'd have a gain of 1,700+% today. So the question is, does Palantir still have some fuel left, or are investors late to the party? Now, let's talk about BigBear. After a massive bull run that brought the stock trading above $8, Big Bear is now trading back around $4.87. That's a 31% drop within the last month alone. However, if you held the stock for more than 3 months, you're probably still up. And year to date, the stock is up 9.44%. If you've been holding the stock for the last 52 weeks, you'd still be up more than 214%. Translation: Big Bear is like a roller coaster ride, and investors need strong stomachs to hold it. And then we have Veritone. Over the last 52 weeks, Veritone has traded between $1.22 and $5.64. Their 52-week high was recorded on October 11th, and over the last year, the stock is up 17%. However, if we zoom in a bit, we can see the stock is up 50% over the last 6 months and 129% in the last 3 months. So we have momentum here. And that's interesting because I think most of us think that Veritone is flatlining, but under the hood, its most important segments are growing. And I'm going to cover that later. So yeah, stock moves, they're fun, right? But market cap and volatility really begin to tell us how the street is pricing in risk. In terms of market cap, Palantir is the biggest company at $396 billion, followed by Big Bear at $1.8 billion and Veritone at just over $200 million. Volatility-wise, though, Big Bear has the biggest 60-month beta of 3.4, followed by Veritone at 3.05 and Palantir at 2.59. And beta tells us more or less how volatile the stock is compared to the broad market. 1 means it's the same as the S&P 500, 2 means it's twice as volatile, and 0.5 means it's 50% less volatile than the S&P 500. And with growth stocks, high beta is normal, and that's why investors love them. If we compare the 3 companies in terms of stock performance, Palantir performed better in the 52-week, year-to-date, and 6-month periods. Veritone performed better in the 3-month and 1-month time periods, while Big Bear, for the most part, is sitting right in the middle of the pack. So you could say that Palantir dominates the long game, Veritone is winning the short game, and Big Bear, they're just holding the middle ground. Now, I'm going to dig into the financials because this is where hype either holds up or falls apart. In the second quarter, Palantir reported a record $1 billion in revenue. This represents a 48% year-over-year increase. Adding to this is Palantir's U.S. domestic revenue, which grew 68% to $733 million, and the increase in its customer base, which also grew 43% year-over-year. This revenue growth resulted in net income up for 144% year-over-year, translating to 13 cents a share on a GAAP basis. Then we have Palantir's Rule of 40. That Rule of 40 is a quick test for companies that offer software products or software as a service. To put it simply, a score above 40 is considered strong, and Palantir, 94%. Palantir's management also guided that for Q3, they expect revenue to come in just under $1.1 billion on the high side, with adjusted income from operations projected to be between $493 and $497 million. For the full year, they expect U.S. commercial revenue to exceed $1.3 billion, which would mean an 85% year-over-year increase. They've also raised their revenue outlook to as much as $4.15 billion. The takeaway: Palantir is firing on all cylinders, but the stock is priced like it can't miss. Then we have Big Bear. In the second quarter, Big Bear reported $32.5 million in revenue, down 18% from last year. Management blames this decline on reduced volume in certain Army programs. The result? Big Bear's net losses surged nearly 1,500% year-over-year. Yikes. These losses reflect ongoing operational and financial challenges that I think Big Bear has to address if it's going to prevent shareholders from selling. Meanwhile, Big Bear's revenue guidance for the year is between $125 and $140 million. So Big Bear's financial story, I think, is simple. Revenue is shrinking, losses are ballooning, and contracts are all carrying risk. And then we have Veritone. In the second quarter, Veritone reported $24 million in revenue, which was unchanged year over year. Its software products and services revenue increased, only to be offset by a decline in its managed services revenue. Veritone's net loss also increased 21% from 22.2 million to 26.8 million. But here's the bigger picture that was discussed on my interview with their CEO. Core AI software grew 45% year over year, public sector revenue grew 90%, and gross margins are well north of 60%. They already cut $8 million in costs and are targeting profitability by the second half of 2026. That's a credible roadmap, right? And it makes Veritone look a lot stronger than its headline number suggests. So yeah, financials, they're backward looking. So now we can flip the script and turn to the future, the growth catalysts. Just a couple of months ago, the US Army awarded Palantir a new enterprise agreement worth up to $10 billion over 10 years. This cements Palantir as a trusted provider of mission-critical software products, potentially securing further contracts from other defense departments in the future. On the commercial side, Palantir expanded its partnership with Lear Corporation, allowing Lear to scale its use of Foundry, Warp Speed, and the AIP across its entire worldwide operations. Lear's IDEA program, powered by Palantir, delivered over $30 million in savings in the first half of 2025. Palantir also announced a multi-year expansion of its partnership with Sompo Holdings through its Japanese joint venture. Foundry is now embedded across Sompo subsidiaries, supporting functions from senior care reporting to modernizing insurance claims. So you could say this, Palantir has momentum in both defense and commercial, and once their software embeds, it's nearly impossible to rip out. On August 20th, BigBear announced a multi-year partnership with NFL's Washington Commanders. They also launched a next-generation cargo security platform in Panama. BigBear is chasing visibility and partnerships, but execution will decide whether these moves translate into real revenue. And Veritone? Well, they're also gaining traction in defense and law enforcement. The U.S. Air Force Office of Special Investigations recently awarded Veritone a sole source contract to deploy its AI-aware and IDEMS platforms, enabling investigators to process vast amounts of video, audio, and text data faster and with greater accuracy. Even the Riverside County Sheriff's Office signed a multi-year deal to use Veritone's Redact software. That wasn't just a test. That's a sign of confidence, which could enable Veritone to potentially roll out the same technology to law enforcement everywhere. Not only that, in July, Veritone received its awardable status on the DoD's Platform One marketplace, opening the doors to a broader base of federal clients. But here's what I think is the most exciting catalyst that's new: Veritone's Data Refinery. In Q2 alone, it processed 5 trillion tokens of unstructured data, converting it into AI-ready training data. And that's roughly equivalent to the training set used for some of today's largest models. And with $400 billion expected to be invested in AI this year, training data is a massive market, and Veritone is now competing in it. Of course, we can't ignore the risks, right? Palantir's biggest issue today, as I see it, is its high PE. To put it into context, an investor is paying $738 today for every $1 in net profit. So you can say that Palantir is priced for protection, which leaves no room for mistakes. And the biggest issue I see with BigBear are its financials. Both the top and bottom lines are generally in decline. Projects are apparently lined up, but that doesn't guarantee income. Revenue depends heavily on government contracts, so any adjustments or cancellations will hit them hard. And I see BigBear as being one contract away from serious trouble. And the biggest issue I see with Veritone is still profitability and its balance sheet. Cash is still tight, debt is still high, and it relies on third-party AI models inside AIware, which creates risk if the partners underperform. So while the upside is real, I think investors need to size their positions carefully. So where do I stand? Well, Palantir, I think, is still the clear winner. Their growth and contracts are unmatched, but at a PE of 738, you're paying a massive premium. Any stumble could hammer the stock. And Big Bear, I think, is a bit risky right now. Losses are ballooning, execution is inconsistent, and reliance on a handful of Army contracts makes it fragile. And Veritone, well, this one could have the real possibility of being a darling growth story in 2026. With 90% plus public sector growth, 60% plus margins, potentially new defense contracts, and of course the data refinery opening a brand new market, it's no longer just a speculative flyer. It's a real asymmetric bet. The balance sheet risk, though, is there, but the upside case, I think, is much stronger than I thought before. If I had to allocate capital today, I'd put most of it into Palantir, build a meaningful position using risk capital in Veritone, and probably avoid Big Bear at least until their financials stabilize. So the way I see it, Palantir is the giant, Veritone has some real upside potential, and Big Bear is still stuck in the weeds. But what do you think? Did I get this analysis right? Let me know in the comments below. And while you're there, if you found this analysis helpful, don't forget to like and subscribe so others will find it as well. That's it for me today. Thank you so much for watching, and I'll see you next time.